Hello Canadians, I'm your mentor Bakar Bharti, CEO PAS. In this video, I'm going to explain to you an important financial statement called Statement of Cash Flows. Here is a disclaimer that this video is intended for orientation purposes only. If you need mentoring or coaching in accounting, you can always contact us at 289-952-3494 or else you can send us an email at pascat2017@gmail.com. Here's the scheme of presentation. We'll look at purpose of cash flow statement, and then I'm going to explain to you some of the important segments of cash flow statement. And finally, we'll look into a worked example of cash flow statement. So what is the purpose of cash flow statement? It is meant to report a company's cash receipts and cash payments for an accounting period or fiscal period. And primarily, it focuses on the liquidity position of a business or a company. So what is liquidity position? It means the ability of a business to meet its cash obligations as and when they arise. Now, here are the important segments of cash flow statement. Any cash flow statement is divided into three components. In the first component, we look at the cash generated or consumed through operating activities. In the second component, we look at cash generated or consumed through investing activities. And the third component, we look at cash generated or consumed through financing activities. Now here's a worked example of cash flow statement. First component, this cash flow statement is prepared for the year ended December 31st, 2016, and all the values are expressed in millions of dollars. First, we look at cash generated from or used for operating activities. So here's the net income figure that has been taken from the income statement, $1131.9, and then we have to make certain adjustment. We know that this $1131.91 is an accrual profit figure, that is a non-cash item, so we have to make certain adjustment in relation to non-cash items that may affect our total cash flows. For example, depreciation on property and equipment and investment property is added back because it's a non-cash expense. It won't reduce your cash generation from operating activities. Then loss or gain on disposal of property. This figure is a positive figure that implies a loss, again, and adding back. And then there are other operating activities relating to receivables, changes in inventories or payables. It's a negative figure of minus 556.9. And the cumulative effect of all these adjustments is that cash generated from operating activities comes to $897 million. That is a positive figure. Now here is the second component, that is the investing activities. So additions to property and equipment and investment property is a negative figure. Of course, whenever you buy property and equipment, there will be a cash outflow. Similarly, there is a proceeds on disposition of property and equipment and investment property. It's a cash inflow, $25.55 million. Then there is acquisition of long-term investment, that is a cash outflow of $165 million. And proceeds from the disposition of long-term investments is a cash inflow of $11.45 million. Then there are other investing activities that have resulted in a cash inflow of $87 million. The cumulative effect is a cash outflow of $697.45 million from investing activities. Now we move to the last component, that is the financing activities, that how you finance your business during the past fiscal year. Dividends paid is a cash outflow, that is $211 million. Issuance of long-term debt is a cash inflow with $544 million figures. And there's a repayment of long-term debt and finance lease liabilities. Of course, it's a cash outflow of $434.56 million. And there are other financing activities that have resulted in a cash inflow of $131.44 million. The cumulative effect is that cash generated from financing activities is $29.88 million. That is a positive figure or cash inflow. Then cash generated in the year is the sum total of cash generated or consumed through operating activities, investing activities, and financing activities. And this figure is $229.43 million. In this case, cash that is net of bank indebtedness beginning of the year we assume is $404 million. And effect on exchange rate fluctuations on cash held is a negative figure of $0.43 million. This implies that probably because of exchange rate losses, there's a cash outflow. And finally, cash net of bank indebtedness at the end of the year is $633 million. This figure is important, and this figure should match with the figure of cash shown in the balance sheet of this entity. For mentoring and coaching of accounting, send us an email at pascat2017@gmail.com or call us at 289-952-3494 or else you can visit our website at www.pascat.com. I hope you enjoyed this video. Thank you.